All right, guys. What's going on? Sorry. Took me a second. Had to make sure that I had my mic actually hooked up. I was going through the settings this morning. What's going on? How's everybody doing? See how many people we have in the chat. Handful of people in the chat. As a reminder, if you are not already a subscriber, go ahead and hit the subscribe button wherever it is. I don't have one that's fancy on the screen right below, but I know that there's a subscribe button somewhere on your page. And if you could go ahead and hit the like button as well. And we'll get started in a minute or two. Just give me a sound check. You give me a sound check. I'll give myself a throat clear check. And we'll get this started in a second. Okay, scale them into a position as we speak, as I speak. How's it going, guys? Just adding right now. Okay. Almost in, almost deployed. All right. All right, guys, what's going on? Go through the chat. Okay, Cornholio. As Cornholio said, please don't forget to smash the likes. So for those of you that are new, my name's Ryan, also known as Cantor Clark on Twitter. And on behalf of myself and my partner, Josh Rager, thank you for tuning in to the BlockRoots YouTube channel. We're not going to go off anymore on the normal tangent that we start streams with. So, Rodero, Ross, what's up, man? John Potts, Werner, what's going on? Joe Rule. For a second, I read that as Ja Rule. And Jarvis, what's up? Okay, good morning from Canada. Good morning. My grandmother is actually from Canada originally. My mom was adopted, and her mother, my grandmother, is originally from Canada. Her parents actually died in the earthquake, great earthquake in Canada, or this was actually in Alaska, a really long time ago. Okay, sound is good. All right, so we have some alerts. So I set my alerts, and I have them hooked up to my watch right now, just in case we're in the stream. I'm not paying attention. I'm entered into a trade, but you'll see that in a second. Crypto Sam, what's going on? Justin, okay. Pedrig, what's up? Pedrig reminds me of one of my favorite golfers, Pedrig Harrington. Podrig, or Pedrig. I'm not sure how to pronounce it. Okay, sound good. What's up? What's up, Swift? What's up, buddy? Flip Mode Squad. Bus of Bus, what's up? Mutate, what's up, man? Okay. All right, so I think I said hi to said hi to enough people. Let's hop right in the stream right now. So what I am doing right now is trading in the Phemex competition. So for those of you that are not familiar, BlockRoots, we are partners with Phemex. So as you can see below, we do have a link up, and it is Phemex.trade, and that gives you access to whatever type of promotion that they're running. And if you use the link and you don't get any kind of promotion, whether it's an additional deposit into your trading account or reduced fees, just let myself or my partner Josh know, and we'll make sure that we take care of that for you. Okay. Let me see if I could. Let me throw myself in the chat. Where am I? Am I gonna go with the image right now? One sec. Where are we? All right, me. Let's bring this to front, maybe. Order, move to top. There we go. All right, square this up a little bit. I'll join you guys for this stream. We'll hang out. All right, so my head is in. I think it's in a decent spot. Okay, so we're in this competition right now. I'm actually I'm doing well. So this is our team. This is the desk. I'm actually in first right now. We have a team of 31 people. So nothing extraordinary, really. Honestly, I've had a couple trades. I'm up 19.5%, and now in this trade, looks like I might tag on a few more percent. I've actually just went long off of yesterday's high. So hopefully looking to tap out at this TP right here. Let's see, just take another few percentage off. I'm actually going to tap this during the stream. Tap that just to get rid of it. I'm trying to really just play first touches at key levels. So not trying to hold on to anything, not trying to stay in a swing position whatsoever, really trying to just compound small gains and take very mechanical setups. If any better setup current comes on during the stream, I'll be glad to take it, but I'm looking for anything between 1.5 to 3%. So 2% gain off of that high. I'm just going to be compounding those all day pretty much. All right, so yeah, this is the competition right now. There's a bunch of teams, and hopefully we do as well as we did last time. Yeah, so how's everybody feeling right now about what's going on with BTC? How do we feel about this more recent Elon pump, we'll call it? The Elon pump. Let me go back to the chat. Yeah, so are we bearish? Are we bullish? How are we feeling about this? How are we feeling about this? Let's see. Sound check 10 out of 10. Happy that that's working properly. We bullish? We bearish? We lagging? I'm wondering if I might actually enter back in this trade. I'm looking at Phemex has a slightly different price than the chart that I was really charting off of. Okay. All praise Elon. Hey man, it would be great if you could review DEX TF protocol as long-term hold. Yeah, you know what, Swift? That's funny because I actually I have a bag of DEX. A peer in CT, someone that I have gone back and forth with for a while, been always respected. Someone who is a very talented trader from traditional space as well. Alex Kruger, he is on the DEX team, and I am bullish on DEX. Neutral, bearish. Let's see, 51K still in the cards. A little pump, but bearish. It's like every time it comes out with news, BTC just ready to drop hard. Yeah, it's funny how it's conspiracy alert, as Mute said. It's funny how Elon's pumps, they're always close to a large options expiry. So, yeah, we'll take a look at share. So pretty much neutral. So we'll just go back to the chart really quick and take a look at it. Yeah, so this is the pump this morning. Pretty much we are looking at right after the Elon's tweet, I think, was exactly at this bottom. So we had a move up today that was, this is from high to low, from low to high rather, just over 6.5%, and now we're up around 2.75% for the day. So, Elon loves to come out there at the I think at the best time for the market and throws a curveball and posts something that gets everyone confident, right? Does a good job of doing that and sort of saves the day. As I said, leading up into this, and I put out we put out a video for the newsletter subscribers. We went over this in the BlockRoots platform. There's really no reason to be bearish on BTC. No reason to be bearish. Hasn't really lost significant levels in any kind of drastic way that would make us really assume anything other than a ranging setup, maybe a period of consolidation, maybe temporary sideways market. I mean, not for nothing, this is the norm in markets. Markets spend 70% of the time ranging and consolidating and taking pause in between what are very short-lived periods of trends. Now, you have secular trends that are in motion for a long time, but the market puts in the bulk of its moves in a very short amount of time. So this is another reason why you do, if you're interested in something, it's tough to just time the market and be a trader solely, because it's very likely that you're going to miss the moves. If you look at BTC, if you look at alts, you don't really get to take that confirmation trade most of the time, where you get to just kind of walk in with the comfort of knowing that now it's good and it's ready to go up. A lot of the time it begins to set up, it consolidates for a while, it gives you maybe the hints that it's about to break out, and then that markup period, that breakout, that really strong initial impulse that covers a lot of the ground, that happens in a very short amount of time. We talk about in all of trading, and when we're talking about structure, we will constantly refer to, how textbook retests, textbook breakouts will take place. And I say textbook because they only happen in a textbook, where you have, let's say, a resistance that has been resistance for a really long period of time, and you're looking for this SR flip to occur, and permission to go long is when it breaks out, right? And when it holds this level, when it's accepted above here, when it doesn't lose this after the breakout, when there's no fake out, all of those things, they would lead us to say that this SR flip is a good buying opportunity, and yeah, I'm gonna buy it when it flips. Now, if something is really that bullish and has kind of eyes on the charts, everyone focused on it, it's unlikely that you're going to get that kind of retest. The break is confirmation. The break brings new buyers into the market, and a really strong move doesn't let buyers in, right? It doesn't let you say, oh, I'm just going to put a limit order down here, and I'm going to get in passively. If you get filled after a really substantial breakout, a key contextual level, a level that most people are going to agree on being very important. If you get filled with a limit order all the way back at that technical level, chances are that is, as might be referred to as adverse selection, right? You shouldn't want to get filled for that type of, you shouldn't want to be filled for that type of entry, because ultimately what that's showing you is really kind of weakness, right? You want to see the price leaves an area very quickly. So with alts, with BTC, you have to be in the market. You have to be in the market, I think, passively also if you're trading, because you're going to be asleep. You're not going to be at the chart. You're not going to have your conditional order there, and you can miss these moves. Now, back to this, I don't think that this is bearish. I think that it's just likely going to be ranging. I don't know when it's going to break, and that's the point of holding a certain amount, to be able to walk away and say, I don't know when it's going to break, but I do want to have exposure if it does. Now, normally in any other kind of condition, I say that this is kind of, I say normally because I feel like this is a new paradigm. When we had the market, before it was a break of an all-time high, when the market was still technically ranging because it's still under that all-time high, if we did have something like this where you had, weekly progress on the way up, and then we're violating a previous weekly level and we're not able to treat it as support, in previous conditions, it would have been a very simple swing play for me just to tack onto a separate account or a sub account. Phemex offers sub accounts. I think FTX does too. Probably every exchange will. This would have been a very obvious. Okay, I'm gonna tack on either a hedge or a swing short position, because this is setting up now for one. It failed on the daily, so if we just look at this at this weekly level, you got that daily retest. That failed at the level, so came back down to this level, holding it now. So there would be good argument actually to consider shorting this in any other condition, I would say, right? Where a lot of the times we would say, okay, you lose this level on the weekly, over time it's coming back down here, and the invalidation is right back above there, because hey, if the idea is you're gaining acceptance back within a weekly range, where we spent a good amount of time consolidating and developing price action. If you're gaining acceptance back below there, you're likely to fall back into that same rotational behavior. And if you're back above there, then that was your overthrow to the downside. You violated a little, but if you're back above that high, you're probably going to go on to move up. In these conditions, we can't say that. I don't think you can, because I think that you have this other buyer that's in the market right now that is responsible for most of the big buying that we're seeing on some of the spot exchanges, even though I don't like to go too far into that, because I imagine that at some point that can be exploited, right? If all eyes are on this on-chain metrics, like how hard is it to move a few things around to gain or to incite confidence in retail participants, and to have them just indiscriminately buy. So I don't think that this is bearish right now. Just to put some of the key swing levels back on before we get down to the intraday. As I said in the stream the other day, so if we back out of this, we have a daily and weekly highest close up here. Weekly highest close, but this level right below, it shares the daily and weekly. So this is that last daily swing point that we've fallen back within. So this is, a range that we were within from the end of February to pretty much the midpoint of March. Temporarily gained acceptance outside, unable to hold. So you had a few choppy periods up here. And after this happens, after you're falling back below this daily and gaining acceptance into this range, you're just looking for the mid to come back into play. In bullish conditions, always expect that pullback or that level to be front ran, or that pullback to be a little bit shallower. So I was in a short the other night where I slept on it, and I should have just put my TP right here, but I put it a hair below because I figured, you're going to get overthrow, right? Didn't get overthrow. So I actually closed out the position at 5 o'clock in the morning after looking at my watch in the middle of the night and seeing that my level had been broken through to pay attention, and I closed it out for a small profit. I should have been in it for a tremendous profit. So, every level that is below us, I always approach with a level of optimism and say, bullish conditions. Everyone, there's a ton of other people that are looking to buy. So one, not for nothing, you're going to be on the back of the queue if you're entering late. And there are people that are just looking to market in ahead of you, right? All these dips, I would say you have to treat any kind of substantial dip as a mean reversion opportunity for a larger, more passive player that's looking to buy any kind of pullback that, let's say, is over 5% or in between 5 and 10%, because there are people that are getting involved like that. That takes place. That's what happens in traditional markets. When you have a long-only asset manager, you have, let's say, someone who's trying to build a position over time, they're going to look at these dips, all of them, as dip buying opportunities, because this whole general area to them means nothing. So you just have to keep that in mind. I think you still have to keep that in mind. I don't want to say that is, that, because that thinking happened in 2017 too, where we were like, institutions are coming. They're coming, now they're here, right? So this 53 to 52 level, as long as this holds, we're setting up for I would say it's going to look back. We're going to look back at it and say, that was a bullish consolidation. You don't get to have all of them where they're perfect and they are all upward sloping, right? Or this is an ugly one.
I'm having trouble hearing you.
It's my watch, excuse me. You don't get to have all consolidations look like, obviously perfect, right? Where we're all, see, it's so obvious, it's so bullish. The market it's going to turn you on your head a couple times, right? We've had it easy for up to this point. So you're going to have these periods that introduce uncertainty. But as you can see, and this is what I was going over the other day, between this range, right, the areas where we've been most accepted, here and here, the areas that there are gaps on the chart, as close as we have to gaps that are still untested. The one that's untested right now is right here. Okay, so this whole area between here, this little area between there, that is the area where there's the least amount of activity in this range, okay, aside from the lows and the highs. So these are the areas that have shut price down. These are the areas right here, this area between 52 and 53. That's the area where we've spent the least amount of time, transacted the least amount of volume, and we should see that this acts as support. It's an area where the price action was imbalanced, and we haven't revisited that and cleaned it up. So as long as that holds, I don't think that there's any reason to be to really be down, looking a lot further down. If we do break back below and fall back within this range, back below 52, I just assume we're going to start testing these lows again. So, hitting the obvious round numbers, so 50, 50K, pretty important psychological level, I would say. And then from there, testing these lows. And if you start gaining acceptance into this range with any kind of conviction, and you'll see that, the spot market is not really picking up, then you could just explore the lower end of this range as a whole. But that's not the case right now. That's just the idea of, this is just the idea of we have our levels in mind that we're going to be paying attention to. And it's always good to have an idea of where price might find its footing to the downside. So far, though, doing a decent job above this range. As I said before, this structure has a vague similarity, somewhat, it's a decent similarity to what took place over here. Okay, you have a significant move up, checked, downward sloping structure of lower highs across the board. For a while, the lows are maintained. Breakdown below the initial low that was put in. So we have this sort of W low, all right? A low, a higher low, sort of like it's a swing failure, but it's not the kind that everyone's familiar with. This is the swing failure most people think of. Okay, this is a swing failure too, a failure swing. Failure to swing all the way back down to the low. So that low is taken. So we're kind of, doing the same thing we've done many times before. It just, every time that you're in it again, it's almost like you have this really inconvenient amnesia, right? We're all, most people are kind of losing their heads across the board. Oh my God, price is doing such and such, and, the trend is over, when we really haven't had that much change, aside from, this is the first time that price has kind of slowed down. And, people for my friends that like to use RSI, I always kind of bust their balls because it's fun. Because the RSI is, a lot of times you don't need to look at the RSI to see a divergence. So you have a divergence right here. So a series of lower highs in the RSI. All right, but you see that in the price action. The RSI is an oscillator that on a normal setting is a 14-period rolling window. So if you're looking at this, and for one, if you're looking at it on the weekly, all of these are within that 14 period. So as long as you have price action that is not moving up as much as the last impulsive move, it's going to show that momentum is slowed. But you don't need to use an RSI to do that, right? You could just see, okay, within this last 14 periods, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and this including all of the prior just complete monstrous uptrend, you have a leg, pullback, a smaller leg, pullback, and then a smaller leg. So yeah, it's clear that momentum is beginning to shift. Now going down to the lower time frames, because this is what I want to focus on. We're trading in the competition. Before we cap off on the higher time frames, again, just to kind of reiterate I'll say these are my kind of balls to the wall levels, right? I'm going to be taking as many intraday trades off of these technical levels as I can. Swing positions for me, all right, are back above 59. So I will look for as big of a swing long position as possible if we are breaking above 59 and clearly not showing a sign of immediate rejection. At that point, as you can see, we are breaking what has been, this trend line. Don't worry about trend lines getting drawn perfectly, because like I said, what we can do to this chart is pretty amazing. We could just draw a bunch of trend lines, right? So we'll put the, where's my trend line tool? One sec. What's my line tool? Let's put the line tool on. Let's make the screen like that. Draw a bunch of trend lines, yada, yada, yada. All right, now turn this off. And what do we have? We have a bunch of trend lines that actually work. So take this one off, take this one off, take this one off. And look, we have, this level was amazing. And then we broke above, and oh my God, it's working again. And okay, so you see the point. You could just draw these trend lines, that's without having a chart on, right? You could find stuff that works. When you're drawing a trend line with a chart visible, the benefit of hindsight analysis is beautiful, right? You could draw it so it fits perfectly. It does work though, because what you're really doing when you're doing TA and drawing trend lines, and I wouldn't call my trading TA trading. There's a mistake in that, right? Technical analysis, it's a way of defining risk. My trading is primarily off of where we've spent the most amount of time, what order flow is showing, who's getting it wrong. I'm always trying to find on the lower time frames and the higher time frame at different scales, who is right, who is wrong, where are those participants that are wrong getting caught off sides, or where might they get caught off sides. But the trend lines are useful because what they show is sort of downward progress over time. Over this period of time, we've had price make lower highs, right, across the board. It's put in less effort to the upside. So if you're above this, you're starting to change progress, right? You, for the first time, are breaking out against this movement through time. Now back above 59, that puts us back above the highest weekly close. So 59 is right up at this level right here. Okay, and at this point, that's a key contextual level, because if you are looking at this, in 2018, 2019, 2020 thinking, you would look at this and say, okay, broke weekly structure, defining risk above here, backside retest of this is probably coming back down to this level, targets down here, invalidation back above that high, right? Now, that's a key contextual level. So for back above there, your idea is wrong, okay? If your idea is a reversal and price is back above what was probably the most significant chart defining area for a reversal, right? Going all the way out to the higher time frames trump lower time frames. Then if you're back above it and you're not just, I'm not talking about back above it on a 1 minute chart. I'm talking about you found structure above it on a 30-minute, hourly, 4-hour chart. The more the better, but the more, actually not the more the better, because the more confirmation you wait for, the more of the trade that's in the rear view. But we could be comparing very small rounding error type differences if we're talking about the next move up after a break of this consolidation, right? Meaning if you get in at 59,500 versus 59,100, whatever. Yeah. So on the low time frames, let me just so that's a higher time frames. 59 I think is kind of very obvious to me, because clearly at that point you have this little micro consolidation that led to this breakdown. This is the little range, right? If you're back above there, that's what I want to see in any kind of, if we have a structure like this. So let's say post breakdown you range, so range like that. If you break down from there, a lot of people are going to assume continuation, usually trap a lot of people down here. Break above. If you treat the top side of this as support, I think that's the most bullish situation. If you start to violate it, it doesn't necessarily change the fact that it could be a reversal in the making. It's just that if I start to see the support form at the uppermost extreme, then I know what. It's just imagine that, you know, the chart is showing you what it is showing you, the activity of the underlying participants. The higher up that it corrects after a big move like this, and it's respecting the top level of any kind of structure you're looking at, you know, it's the same as if you only get a pullback to the 382 on the fib versus the 5 or the 618. It's showing you a sense of urgency by buyers, right? They're stepping in for a much shallower pullback, right, at a much more bullish level. So that 59 level to me, you know, I don't know, you tell me. How would you feel if you saw that after price took out this low, retested the midpoint of this range, and now is back above here finding support? I mean, do you think that this is just coming up here to take out that high? No, I think that's probably going to lead to your expansion. Not saying that that's going to be the course of activity that we see moving forward. That would be pretty quick, right? But sense of urgency by bigger participants, you know, like I said, this time is different, and it does feel different. Even though that's a very dangerous sentence, right? That this time is different. But higher time frame, things are looking good. You know, I mentioned before that you know, we share this platform, Genesis Volatility. I'm friends with Greg. They've given us access to the platform. What we're seeing right now, if we just look at the current order book up to March expiration, we'll just group these by delta. You know, we're seeing that there is there's the highest open interest at 40K. So I think that that's kind of irrelevant right now. One, if you're an options writer, if you're a market maker, you're not really worried about price expiring under 40K right now, right? It's the 24th, that's the 26th. After that, right, going into April, we start to see that by delta, right, so not just by strike, but by delta, we are having a very positive skew. So these 30 delta, all right, buckets, okay, from the beginning of April to May are showing, they're showing a lot of aggressiveness, not aggressiveness, but a lot of interest in that upside call exposure. So into April, you know, that 80K strike, 60, I think it's 67, 68, 80K, and then even 100K, we've seen a big pickup in activity there. So if we just go to open interest and we look at the strikes and we look at going into the month of April, we see a big pickup in activity. This is, let's just make sure that we are, yeah, we're into April. We see a big pickup in activity. So we have the 60K strike, we have the, what is this, the 80K strike, and then the other, what was I on? I was on, let's see, by expiration. Okay, here we go. So we start to see a big pickup in activity. You could see at 75K, 80K, 100K going into June. So I think that there is that search for upside yield that is really showing its interest is showing in the options market. So if you're not familiar with Genesis Volatility, if you don't have a fucking clue what I'm talking about when I talk about skew, because listen, I've traded options myself. I've used options for long exposure, for short exposure, to get delta neutral, to get exposure to just volatility, to hedge a portfolio. I've used options in pretty much every way that you can imagine, but options are they are beyond me in terms of maths. When it gets into the high level stuff, I'm not going to sit here and act like, you know, I'm going to be teaching you options on this YouTube. I am absolutely not going to be teaching you options on this YouTube. I have no place teaching anyone options beyond whatever I know. And I think that there are always better people that are suited to teach things, all right, when it's their area of competence, obviously. Like, I trust myself with market profile and order flow, but I don't think that I deserve anyone's attention when it comes to teaching options. Genesis Volatility has a free YouTube now, okay? They're not selling on YouTube, so I'm not shilling something that they're selling. They have a product. Yes, it's a fraction of the cost of SKU. It's a phenomenal product, but take advantage of the free YouTube, right? All the things you want to know: implied volatility, what is SKU, what is margin, the options Greeks, okay, delta, gamma, theta, all right, vega, and then you have even more ones that are second, third order, fourth order. You go down the line. So check out their YouTube if you want to learn more of that. All right, let's get back to lower time frame price action. Does anyone have any specific questions that I'm going to that I should touch on? My idea with trading this competition, so I got out of that scalp, right? And ultimately, I've actually would have TP'd at about a percentage higher. My idea with this competition is one, this time I deposited the minimum, all right, which thankfully I deposited the minimum. Last competition we did, I deposited like a half a BTC or a full BTC, and the benefit of trading at the minimum, so depositing the minimum, is no market impact, right? Easy to get filled with a limit. Obviously, if you're trying to get filled with a limit, you're always going to be at the back of the queue if you're entering in after people, right? So if you see this large order at the bid, if I want to put a limit at 55,932 right now, I'm going to the back of the queue regardless of size. But if I want to mark it in, there's no slippage, right? My max position right now, if I was to use 100 times leverage, is 28,000 contracts. I'm using 10x, and so that's a maximum contract amount of 3,200 contracts, 3,217. I don't want to look for any swing positions right now. I want to just trade the key technical areas where I expect there to be a very brief amount of friction. And what I want to do is really limit myself as long as it fits, right? If I'm able to enter in the position at minimal cost, I want to limit myself to 1 to 2% upside above cost. So that's it. Maybe I'll take 100 trades, maybe I'll take 200 trades, maybe I'll get 50 trades, right? Every time that we get a first visit back to a key level, meaning that the level hasn't been, so for example, if we're looking at this level right now, maybe this is a swing position setting up. Maybe it is, but I don't really care about it right now. I would rather see that we do something like if we're looking at the daily chart right now, and this is a trending day, right? This technically it's your kind of double distribution. It falls under the category of a trending day. My entry was when there were single prints back here. I wanted to see that single print level get revisited. All right, I wanted to see whether or not that imbalanced area would leave us springing out of it. Okay, so if we want to look at what area I'm talking about, I originally was talking about getting filled between right here. Why is that locking in? So this was the area where I just got in that position. That's fucking drawing tools annoying. It was right down here. Got filled into this low and wanted to immediately get out. My idea was I wanted to get filled at the first test of this high again. And that's that, okay? The next area that I think is probably a good area that I'm interested in, and I have alerts set up just so I could make sure that I'm getting involved at these areas, is back at this 56,500 level. So if we come back up here, so this point of control, we wick back up to here. I'll probably look to get into a quick short scalp there just off of where most of the activity came in. Other than that, the next play that I'll be looking to take is back up at the high. Okay, the initial test of this high, the first revisit back to what has been the high to turn us back, I think that you're going to get another play off of that. And then levels below us and above us. So you have a little bit of confluence back above this high into this daily and weekly close. Revisited yesterday's high. So let me just put the session volume back on. All right, so revisited yesterday's session high. I had orders back into that value area. So if you saw the beginning of the stream, I don't know if I still had the order. I was tagging them on. I had limits down here. I actually entered in, started chasing it up at market. If we start falling back below lower than this, like let's say we start falling from here, I would actually look to get involved right around 55, 400, 55, 450 level. I think that I'm going to get a lot of these first tests. All right, so that's the idea. First test back to a level where there's an imbalance, where there's a sticky point, where we've been rejected, and getting out very quickly. Strong day so far, but if we're just looking at this on an individual level, we had a low put in. Okay, you have a strong trending day outside of the structure. Most of the volume is sitting above us though. And one thing that I always want to do, anytime there is a Major level broken, major news catalyst, major anything that results in, whether it's, exogenous, right? So something outside of the market. So Elon, for example, just get to a point. Elon's tweet, I tagged on an anchored VWAP from there. So Elon's tweet, big move off of there. And now what I see post Elon's tweet is where most of the activity has been, or rather where most of the volume has been tagged on, where the most of the activity has occurred. And that's right here. So that is right now, that VWAP is around 56,149. So, I mean, technically, that point of control is right there. So this 56.5 level that I was just talking about, like let's say we just get a poke up to here. I honestly don't know if I would want to just play the first touch off of that level, because if anything, what this might set up is a long to a short for me for a scalp. Let's say that we get a movement back up above this level. We're back above the point of control. We're trading back above where most of the risk came on. Then I would assume that this is not going to be a lower high in the making, and we're going to be revisiting this high. So I might honestly be able to get, what ultimately ends up occurring is most of the value will be distributed at this high for the rest of the day. And then maybe we'll get a long from here back up to the high, and then I'll be able to flip short from here back somewhere down to the midpoint of the structure. Because I don't know if, I'm not sure if this does something like this and then just moves up from here. I could see this chopping around, up to the Elon candle was chopping. Big options expiry coming up on the 26th. Not that I think that that's going to have a material, like large impact on the market. But the thing is, it's not what it is and what it might do. It's what people think of it, right? So if all of us are sitting on the sideline, and even though, we could easily look something up on the chart, we could go back and sort of plot all the individual max pain scenarios. Max pain is at 44 right now. Max pain being where price would expire that would leave most of the contracts worthless. If you're an options writer, if you're an options market maker, there's some times when there's no market maker involved, right? Where a buyer and seller, they meet perfectly. Rarely, right? But if you're an options writer, if you're an options seller, let's say that you're the one, this is not the case, but let's say there's one options, writer, there's one options market maker responsible for selling all those 40K puts. Like, if he has enough capital, he wants to defend that level to make sure that that price does not close below there. So he might try to defend that level. He certainly doesn't want price to revisit that area. And he'll certainly have to hedge as we get closer to that area, which can introduce some interesting gamma effects. I don't think that that's going to occur. But I do think that when these things in this kind of immature stage of uncertainty around whether or not they're going to have an impact on the market, when they're still young and there is uncertainty, that uncertainty breeds a lack of activity and a lack of conviction in terms of positioning by players in the market. So you might see a lot of this kind of tentative price action, and I say it's tentative price action because when you're tentative as a trader and you're getting in and out of positions and you're not really certain and you're not locking anything down, you create a choppy environment, right? So the summation of all of those tentative traders, now we're going down a loophole that might be a theoretical situation that does not, it's just theoretical. It might not be the case at all, but you could really go off on a limb with this train of thought. So after the 26th, when that's behind us and the market can say, oof, that's out of the way. I think that maybe we'll see that there's a lot more conviction to the upside. As long as these lows hold, that's what I'm expecting. If we look at the individual profile, just look at this for the day. Again, strong trending move. This is the area where you would want to see support maintained. So drawing tool doesn't work. I forgot. Got to tell Varen or Trip that drawing tools that are outside of this on software don't work with this. They need drawing tools. The high of yesterday, you would want to see the high of yesterday hold, and pretty much this gap in between from today. This area should act as support. So 55.8, 55.7 area should act as support if you're going to look for this move to occur or rather turn into a trending move. Just look at this from this standpoint. Value, imbalance, value, and now this area between those two levels of balance, right? These brief periods of balance, right? Brief periods of agreement. You'll hear me interchangeably use balance, agreement, all these terms. It's just where buyers and sellers are getting involved comfortably. this is where one side is in control. This gap right here, if you start to fall back below this gap, you're looking back down at this low. So another low, another low that I would look to play back around 54.5, right? I don't think that, let's say you break down from here and we get one swift move, I think you're going to find a bounce off of this low. It might be very brief. It might be something where, let's say we're testing here and we break down, and now we're testing back below again before resuming this continuation move down. But there's so many levels I think that you could take these little short bursty trades off of, especially with the limited size. Does anyone have any questions? We'll go through the chat. All right. Okay. Let's see what we got. Okay. So Dex, yeah. I think the Dex, I think all these new platforms in DeFi, they definitely have a place, especially with asset management platforms. The democratization and freedom that comes along with DeFi and a lot of these DeFi projects is really quite incredible. And things like the one thing that I might have trouble is, and there might be some regulatory shock at some point, is the fact that asset management is a highly regulated space in traditional markets. So when you have DeFi protocols that are saying that you can essentially be an asset manager that that people can bet on and buy into, and it's all decentralized, that's a little, I don't know, that's kind of flirting with disaster in the United States. But I think that the whole of DeFi, all that it promises, I think it's all good. But I think you're going to have a lot of resistance towards allowing things like this. I think that it's the way things should be, right? If you're a successful trader and people will believe in you and people want a part of your success, I think that they should have access to that. I think that they have to have access to that with the they have to understand that there are risks that come along with that, but people should be able to make their own choices in that regard. Okay, let's see. Yeah, I think GSQ. I think like you said, best way to describe it, going to slosh around. I don't think we're at any risk right now of really those. That strike is. Let's just take a look at it real quick. Let's look at that 40K strike. And let's look at 44, right? I don't even have to worry about that email. I don't use it anymore. I haven't been on Deribit in so long. They didn't allow Deribit anymore. They don't so I used to trade on Deribit going back last year. I really wish that I could still trade on it, but now you have to have KYC to do anything, which is fucking sucks. All right, so just look at the delta, for example. It's probably like 0.1. Yeah, 44 is, yeah, excuse me, 0.1, that was generous. You have nothing, right? It's very unlikely that that price is, there's very limited low probability the price comes back down here. And what you can do is you can look at delta. So if you want to learn something, right, this is not an exact method, but it's a rough idea of what the probability of an option expiring in the money is. Look at the delta. The delta is pretty close to the probability of that expiring in the money. So if you look at, for example, this 26th 54K put, the delta is 25, right? So it's about a 25% chance that before the end of before that expiration that price closes below or that expires in the money, right, below 54. So if we look at all, for example, as you approach in the money, your delta is going to go up and approach 1. So everything right now that is, everything that is we're considerably above, right, obviously has a 100% probability or chance of expiring in the money. 46K, 44K. The market feels very confident that we're going to expire above these levels before that. As you go closer, right, 52K, 54, right? There's a 74% chance, 87% chance. You could think about it in these terms. It's not exact, but it can help you, right, in terms of getting an idea of what the market's opinion is on certain levels at certain points, right, further out on the curve. Okay. Let's look at it. Oh, I didn't even look at, hold on one sec, guys. Let me go back to the chart really quick. So what I was looking at, oh, that's actually convenient. Hold on one sec. Give me one sec. Bear with me. All right, so I'm going back to the scene switch. That's too funny. So I pulled up the Deribit, and the first thing it did was pull up in an old email of mine that, like I said, I don't use anymore. But it's poor OPSEC. But like I said, I can't use that email anymore. I have a different email for every account, but I can't use Deribit anymore, so kind of had to trash that. On a side note, crypto, pain in the ass, because the amount of email accounts I have, the amount of fucking passwords I have, password manager here, fucking safe here, remote location safe over here. Very smart with my multi-sig. So that's one thing. But going back to this right now, I apologize for that, guys. One sec. Here we go. So this is what I'm looking at. So we're looking at the March 26th expiration, right? So this month. Okay, and what I was talking about was the deltas. So delta, calls, puts. All right, so probability of us expiring below 40K by the 26th, right? 0. Okay. Probability of us closing, above 54K, 76%, right? That's close to the probability. The delta for the 54K strike call. And if we look at, some of these, what's the probability of us closing below 50, that, let's use the, it's actually nothing. So 44K, that's the max pain level. That's got a 0% probability, right? 0% chance. It's not perfect, but it's as close as you could get to the probability without taking in consideration other maths as well, which would give you a finer estimate. But this is a useful thing to pay attention to, the deltas of puts and calls. So you could see, right now the market prices it as a 100% probability that we close below 66K. Go figure. We're at 55 right now. All right, so I apologize for not having that up. Let's get back to your questions. All right. Okay, so Swift Academy said, one sec. Okay, watching lines. All right, slosh, we got, okay, so options, we went over that. All right, so one thing to remember that all these institutions that are buying, like I said this yesterday and day before, maybe it was the day before, they're not as excited as we are. Like, we've been in this echo chamber for a really long time. We've been really pumped about, the advent of institutions coming into this market. So we're really celebrating it all. Every little move that maybe they're taking and every little method that they're using to get into the market, all right? But for them, you just have to think about it like this. This is my long-term value prop, my bullish argument for BTC. One, it's, millennials taking over boomer inheritance, rather inheriting their boomer parents' wealth and then choosing, okay, gold or BTC for store value. That digital stuff seems like it's the way of the future. All right, so very basic answer to that. And I think the simpler it is, the better. Sort of like Occam's razor, right? Least amount of assumptions, whatever that is, I forgot the exact description of Occam's razor. But the simplest answer. So the other thing is BTC now has, one, institutions, it's tough for them to get involved in Bitcoin. It has been. There's been a lot of red tape. There's a lot of hoops that they have to jump through in order to even, be able to offer this to clients. If they're a private hedge fund, no problem, right? But if you're a pension fund, a long-only asset manager, mutual fund, nope. Registered investment advisor, unless you want to fill out individual paperwork and buy it for each individual customer, very difficult, right? So the plumbing is starting to get put in place. The infrastructure is getting built up in a way of now Bitcoin will actually just be thrown into your basket of assets, right? In the same way that, something that's thrown into the S&P benefits from being the S&P, Bitcoin will be thrown into a basket of assets and benefit from that similar approach that asset managers take, right? So long only asset managers, pension funds, your non-fast money participants, so fast money being hedge funds, when they are, let's say that they have an interest in maintaining index exposure or imitating index exposure, they're going to be buying dips in the S&P, right? Okay, we buy a basket of assets when we have a down day, a day that is 1-2 standard deviations outside of the norm. That's when we really pick up heavy. That's when we really hit the market. And now that Bitcoin will get grouped into this basket of assets, I think the argument is over time that just through the trickle in of them slightly entering the market, right, in small amounts, they're huge amounts for the market, but they're, 50 basis point allocation, 1%. Even if you throw small numbers at it, that'll have a massive impact on the overall appreciation of Bitcoin over time. So like I said, we're all really excited about that because it's like they recognize us. Oh my God, we've made it. But for them, it's like it's just okay. Yeah, we're gonna add some Bitcoin from now on, and it's it's not that exciting for them. So I think that I don't think, and because of that, so to really bring this all back, I don't think that you want to be paying attention to all of these, especially when it comes to the downside, like technicals that we used to say, have very simple if this then statements for, if we break the weekly, then we're going to come all the way back down. If the next weekly is at 20K, we have to come all the way back down there. It's like, no, it's a little different, right? In traditional markets, if you have a pullback of traditional markets, right? Traditional participants, fast money, CTAs, hedge funds, pension funds, long only asset managers, big asset managers, small asset managers, quantitative firms, right? You drop 2%. Your high frequency firms, your quants, they're going to be getting in for mean reversion. You drop, 5%. CTAs are going to get in. You drop 10%, 15%. Your value investors are going to pick it up because they're like 15% discount on Apple. You drop 20%, buying opportunity of a lifetime. So you have all of this volatility dampening that exists in traditional markets because of the way that all of this spectrum of traditional market participants operate. And so if those people are coming into crypto, you have to imagine that they're going to really dampen downside volatility, because if they think they're getting in early in something, they're really going to be aggressive about buying dips. Not like, buying dips after something has ran for over a couple decades. Okay, this is something that potentially this is still a very early opportunity because in terms of scale, Bitcoin is really small still, right? $1 trillion, $1 trillion for Bitcoin, but the whole crypto market is under 2 trillion, and that's like nothing, right? That's nothing compared to the equity markets. That's nothing compared to foreign exchange, right? So as this grows, I think that this is just going to grow because of that. So I know I just went off on that, but okay. Sidecoin, I'll take a look at that. One sec. Thank you for thanking me for doing the stream. I appreciate that feedback. So I got to thank my wife for the streams because she has her hunting events 3 days a week where she goes on the fake fox hunts where they drag the scent and they go after it with the horses. But that's coming to an end. She has 2 of those left, and then the club is over for the season. So. Okay, I'll get back. I'm going to look at Sidecoin. Yeah, I'll talk about what's included Canadian, of course. Let me go to that, and we'll pull back up the chart. All right, one sec. Let me log in so we could see what you would look at. Okay. So this is the... Okay, so we won't see the same mean reversion when participants are typical but slow, but now slowly. So Jarvis, what I mean is, like, as I said in the beginning of the stream, in crypto, it used to be that since it was very retail driven, very behavioral driven, and I think it still is to a degree, that, like, let's say in any other market condition, like if we lose, like let's just look at this low for example. if we were to lose this low, a significant weekly low, we lose it, on the higher time frame, we're normally going to be looking, no questions asked, we're looking to retest this structure again. In this kind of market, a dip of that magnitude, it might not get back all the way down to that technical level. So what I'm saying is like previous conditions, very technically driven, very, levels oriented, key contextual levels, as I say, areas where most of the people are saying that these are the most significant levels to hold, defend, and so forth. That if you, like, let's say that this was a weekly chart, it was always the case, and especially in alts, I think you could still apply this to alts, that, you lose that major level, you're just coming back down to the next. That you have to, you're better off stepping out of the way. Most people are going to, so it's going to be self-fulfilling that you come back down to the next technical level. And what that meant was, like, let's say that, we'll reference the previous all-time high, if this was still old market conditions, a correction that began would have most people assuming at some point, a lot earlier on maybe, that it had to come back down to this level, right? But what that writes off is the fact that in a really strong trend, it doesn't let people in, right? So a pullback of that magnitude, if that was to occur, it was probably it was an indication of bearish, maybe bearish headwinds, right? Maybe that was going to be the major turning point for the entire trend. But you would look at major levels like this and assume that you have to come back down to them. So if you lose this weekly, does that immediately mean we're going to come back down to 38? In these conditions, I don't know if it's the case. You could lose, let's say 45, and you have so many people in traditional space that might look at this and say, that's a huge dip buying opportunity. We just came off of the highs, another 30%, multiple standard deviations of the norm. And then maybe you're not going to get that test of that next weekly level all the way back down here. That's my point. Like, it's not that binary of if you lose this level, you have to go to the next major level. Okay, so this is, all right. This is the BlockRoots platform. So this is not a trading group where there's no signals here. We're not sharing entries and exits or any of that. Like, that kind of shit, I think it's stupid, honestly. I honestly have a lot of strong feelings about trading groups, but I don't say them because I think we get grouped in with trading groups sometimes. But, Josh and I trade for a living. Like, Josh and I trade for a living. I've shared my equity curve countless times in the last couple of years, across the board, or pretty much across all approaches. So anyone who ever wants to see it is free to see it. But sharing signals, it's like, one, if you're following someone's signals, you don't know what their hit rate is. You don't know where they are in that sample, right, of wins and losses. You don't know if maybe they're on their 10th win and they might be expecting a loss soon, or if maybe they're on their 5th loss and they're, they could deal with that, but maybe you can't. So it's never good to follow someone else's signals. I know people try to do it. No one's going to stop. It's not going to stop me saying that. It's not going to stop anyone from trying to do it. But we don't share things like that. We don't share like, this is my entry, this is my exit, this is my stop. That's just garbage. I don't think that's how you fucking trade either way. Like, I never take trades. Honestly, like I said, the reason I was sharing, I get into the reason why I started using TradingView is because it was what people on crypto Twitter are most familiar with and most comfortable looking at. But aside from that, you'll never see me. My trading setup is not, I'm not looking at the TV chart when I'm trading. I'm never looking at it. And I'm never, and I am, when I'm in the middle of trading, I'm never doing something like this. I'm not going like, oh, okay, this is an attractive trade setup. I'm going to take. I'm never doing that. So anyone who shares charts like that, to me it strikes me as odd because I don't know. I don't know. I say things sometimes that get me in trouble, so I don't want to go too far down that path. But we have an entire course. So if we go to the course, we'll go into this. Where is it? Course. I think I have to go on to, come on, start learning. Maybe I didn't delete my Kashi. Oh, I don't think I'm subscribed anymore. So on my home page, I am not subscribed anymore. So we have to go in through Kajabi. All right. I don't need to be subscribed, honestly. All right. So order flow, market profile, start the course. And this brings us right into, it's going to start us right here. So introduction to markets, right? Primary, secondary, efficient versus non-efficient, basic order execution types, introduction to margin and leverage, market cycles, supply and demand, yada, yada, yada. Each of these has individual videos. And then this gets into, and then it just goes right into what our bread and butter is, which is market profile and order flow. So this is the entire market profile section. Okay. And this is the order flow section. All right. And then we have supplementary material. So this goes over, funding, basis, some more specific things that are not just about the TPO charts and about the footprint charts. And then we do the live streams as well. All right. So that is the platform. It gets you access to the newsletter. It gets you access to the Discord. It's not, it's something that Josh and I offer. It's honestly, we have a good amount of members, but it's not that significant really. Honestly, I think we, we've done most of the work for it. So it's not like we don't need to continuously, we're not there continuously setting, I think I have to just be as upfront as possible. We're not there sharing setups. So it's kind of done. Like we made the course and that's it. Like we don't want you to, we're not making $100,000 a month off of selling this. Like when you're done with the course, you're done, right? Feel free to unsubscribe, and that's it, right? We don't need subs. Okay. I think we probably have like 300 members, honestly. Some people's Discords have like 1,000, 5,000 people, and they have like, each of them paying $100 a month, off of Blockroot, we're making pennies. So, all right. So nothing really setting up on this right now. Does anyone have any other questions? There were some charts that you guys wanted me to look at. Okay. All right. So yeah, we'll take a look at Shroom. Still bullish on Shroom. It's just, I think it's going through an accumulation period, honestly. I mean, if you look at this, someone's putting in a floor here, right? Someone is putting in a floor here. I mean, and someone in the last stream asked me why I sold my Shroom. I didn't sell my Shroom. I sold a small amount of my Shroom just to balance things out and to get into other positions. But my intention was to get into G-Swap, but I don't know why. And I think I stuck with I think I'm sticking with my original decision. So I might just ape back and more into Shroom. But I wasn't in G-Swap at all. I was just in Shroom. And I think that strikes some people as a little weird, but I don't know. I don't know. Maybe I feel like the Shroom price action looked better. Can't recall. Maybe I got in first in the Shroom. It's kind of anchored to it. But either way, I have a substantial bag in Shroom. I'm probably going to add that back to Shroom. This is being held up right here. That's what I would say. I would say that I am very confident that this is being bid up by people that know what is coming out. I know that people are pretty impatient because they've had a few deadlines that they've missed. Like, listen, shit's fucking hard. I mean, can you do any of this stuff? Because I can't. And you have to, what you're doing is you're buying into other people's talent, right? You're taking a risk either way in half of this garbage. So if you see someone that has a vibrant Telegram, not just full of moon boys, they show up in the Telegram, they say, they're aware of the missing certain deadlines. Joey is the developer, the main guy behind it, and like he knows what product he has. So if you don't want to be part of it, by all means, pack your bags and leave. But you're going to be buying in higher. So, and this honestly, I'm not like favoring this because I have a position in this. So being as upfront as possible. This is not financial advice. I have a position. Yada yada yada. This is like one of the most bullish looking small caps. I mean, look at this chart. So many have done this already where they've put in 1, 2, 3, and this third failure up here has pulled back considerably. This thing is holding up. So, all right. $85, yes, 85 watching. Thank you for pointing that out. Let's look at see a coin. Did someone want me to see? All right, so let's pop that up. See a coin. There we go. All right. Aave. I'm just gonna go through a couple. ADA. Yeah, like I mean, Ross. Like I'm, you know, frustrating too when you want something to come out faster, but it is what it is, right? It's not changing what, you know, if I change my opinion on what I was bullish on because someone didn't put out a project that still hasn't changed in terms of what the outlook is or what they're promising, if I change it based on a timeline changing, you know, it shows that I'm a pretty fickle person, right? And I don't really make the most informed decisions. Sol, okay. Anchor. Okay, I'm just going to add some of these. If you add multiple, I'll probably just pick one, honestly. Yeah, PageRig session VWAP is very useful. You know, it shows you where most of the risk is put on for the day. So, I mean, from trading equities, VWAP is one of the most useful tools. If you're lower time frame trading, if you're portfolio manager, VWAP is really useful too, right? In terms of identifying where most of the liquidity is. But yeah, session VWAP is really useful. I like to use anchored VWAPs from specific areas. So whether it's like the last, and it's not anchored, but a rolling weekly, a rolling 3-day, a 1-day, and then a session is good for getting the individual breakdown. A lot of times it's going to have confluence with the point of control. But then most importantly, I think the most useful VWAPs are anchored from specific catalyst, major breakout, major change in market structure, where most of the risk was put on since then. Airweave, new cipher. All right, and I think we'll go over these for now. Banned, and that's it. Capping it right there. All right, so let's go down the list. Where's Siacoin? One sec. I thought I just added Siacoin to this. Huh? Is it a different? Oh, it's SCU. Where's it popping up, though? Am I missing something? Is that not? Am I? Hold on one sec, guys. Okay. There we go. Okay, sorry about that. All right. So now they're out of order. It's a pain in the ass. All right, so what do we go through? All right, so I'm going to go through this first because it's the one that's right here. All right. So just mark out the most obvious. With alts, I think that a lot of it does come down to technicals. So your key levels right now on this chart are it's, you know, how we would normally look at the chart on the higher time frame on BTC2, your weekly levels. So your next area of major support is back down around 0.013. But obviously, if you break this down on the daily right now, it looks like it might be flagging. We're setting up for a flagging move on the daily chart. So this, you know, big gap up, key contextual level for this chart, big strong move up, small brief consolidation, and this area now acting as support. You know, I don't know if this is going to just move sideways a little bit longer, but as long as this level holds, so this low, I would say, so as long as 0.0182 holds, you know, you could very well consolidate between here for some time, but it looks bullish, right? It looks bullish, kind of like previous pullbacks that we've had. We've had this rounded structure at the high, very good response off of the low, right? So very good response off of yesterday, yesterday, really strong move off of that low. But, you know, until 240, 0.0247 breaks, this might be just setting up for more of a consolidation like we had in the past. So maybe a little bit more sideways activity. You know, it's normal for, after you have a big move like this, you would expect a longer consolidation, honestly. So this right now, when the market is chopping, when the rest of the market is kind of pulling back. I wouldn't expect this to just continue from here. But as long as, like I said, 0.018 holds, what ultimately you don't want is to fall back below previous gaps, right? So key level right around 0.0137, nuke that level to the upside. This is your imbalanced, really strong conviction move. This area should hold, right? You shouldn't gain acceptance back within that level. Everything that takes place within here is normal, as long as this level holds. So you could get thrown out of a ton of positions here. I wouldn't really want this to revisit right away, right? Even if it retests and hold that, I wouldn't want that. But you could see support develop down here. You could see a good amount of chopping activity within here. As long as this level holds and you don't start falling back below here, then I think you're good. Let's see if I could remember what some of those pairs were. ADA. ADA stuck within a weekly consolidation. I mean, again, next major weekly level is all the way back down there. Do I think you're going to come all the way back down there? No. I mean, things would have to drastically change. But it is stuck within a consolidation on the higher time frame. You're ranging between what was the last daily high put in. So 3 drive structure, daily high, kind of the same lows across the board, a little deviation right here. Not a whole lot I would expect from this, other than this is probably just going to, you know, if Bitcoin is consolidating before markup, and that's the impression we have, and I think that you could pretty much say across the board that the majors that are following closely are doing the same thing. So, you know, with this structure right here, I wouldn't want to lose the weekly low, right? So this weekly lowest close, which is right around $1, $1.05, right? As long as that's maintained, you know, and we haven't lost that, and maybe you wick below that, but you reclaim it. As long as we hold this level, whatever takes place between here doesn't really concern me. So if you're in an ADA position, I don't see any reason to exit it. At this point, this high and this low being the highs and low of this range that we're in, anything above 131 again, you know, if you're coming back up to this high, this should have rejected it the first time. If you're back above there, I think that the range is probably done with. All right. Anchor, was that one of them? Yeah. This is like the tightest daily range that I've seen on something. That's clean. I mean, aesthetically, right? That's like, is that I was trying to think of some kind of modern artist, but it didn't come off to my tongue, so I'm a moron. But that is a really clean consolidation, right? This is the trouble, though, right? This is why it benefits to be a holder in projects, because in some projects, right? Not saying like you should hold this project, but all of these could have, you know, up to this point, you have this rounding structure. This is your pullback, right? Oh, you're holding this level. This is good. So anything above this level is a breakout. Well, not 1 or 2 or 3 times. So if you look at this, I want to get an idea of that fake out and beyond. So let's just mark that. And then we'll go down to something like the 4 hour. I mean, this looked good, right? This looked like, oh, we're back above here again, testing the highs of those daily closes, which are right here. And then float back down. And then, yeah, this, so just imagine, and I'm sure you are because you're in this position probably. When you see this candle, are you thinking like, oh, this is the one, or fuck this one, it's going to do this again, right? So that's why it benefits to be a holder in these things rather than just trying to trade them. But if you're looking at this from a trending standpoint, what does it look like? It looks, I mean, put on a 20 period moving average, right? Really strong trend. Pretty far off of that though. Pretty far off of that, but shit, I'm stuck in the drawing tool, that's why. Pretty far off of that, but still, big move up. You know, it's had a consolidation before, had a rip up, and then lost that. So, you know, if I'm looking at this, ultimately what you want to see, I think, is, you know, and alts are messy, right? So we look at this on the daily and you get a really nice confined daily level between closes up here, but you have to zoom out. Like I've said many times before, zoom out and get, you know, the high resolution view of the chart, because the daily is showing you where you closed, right? But that leaves out all of the activity that was very important, because clearly the activity that pushed the daily all the way back to those levels to close, it was substantial, right? That was the area where the market was rejected within those wicks. So you have multiple levels that might not show up on the daily because they're not as clean. So this is the daily line right here. And then the low is the same thing. Like, if we put the daily low based on this consolidation right there, and just color it for the sake of pointing it out. If we look at the 4-hour chart, there's more to the structure than that level, right? So that level's right here, but you have all this activity into here. With this type of move, we've had a big move up before, like this, big move up. So this kind of looks similar, right? Not exactly, but kind of. Consolidation, rip up, break down. The most important thing the trend ends up doing is finding its footing again. Remember, these are illiquid, small caps. They're not going to respect the level. I always use the reference to, treasuries, right? They're not going to trade perfectly. It's not going to trade perfectly like a currency either, where you have some bank stepping in to defend a level, some central bank stepping in. But they're going to be messy. But you want to get the basic idea intact. Keep the basic idea intact, which is basic idea is that this is the strong move that led up to the last consolidation. This area could act as support, but if we nuke this, let it ride, let it play out. Right? That's how I would personally feel. I would be letting it ride. I wouldn't be suddenly panic and selling, because what you could see is the price reaccepts back within this level and then does what? Chops and grinds upward. That's why these types of trends, assets that trend like this, are the most painful, because they slowly grind, and what they don't do is move up in a clean fashion that gets you paid right away. So when I say paid right away, I mean like you have a really clean structure, breaks out, and it never comes back down to this level, right? You always feel like you just caught a lot in this move, right? You're paid. It's already, now it's another level up. You're paid, right? You're not worried about, you're like 2 levels away from being flat again. But what these do is they consolidate, they break out, they consolidate, they retest that level, they consolidate, they break out, they retest that level, they consolidate, they break out, and they just grind the entire way up. So, all right, so air weave. No weekly levels yet, all the way back down to 590. So you got to get down to the daily. Next daily level is, you can see you have, just in terms of confluence, these highs, lows, and previous levels. So 1264, 15 for the high of that range. All right, just looking at where the market spent the most amount of time, sideways, impulse, sideways, retest, impulse, sideways, longer range. So now you're ranging up here, but what have you done in the past? Again, not clean movement, not paying you, not one-sided. It has so far come back to the previous levels. So if this is a previous level and it's down here, like, what do you think might occur? Right? That might occur. And has that so far been leading to trend resumption and continuation, or reversal? Well, so far it's led to resumption. So if I'm a holder of Airweave, that's not throwing me off of this. Ultimately, what we'd have to see, in my opinion, right, what I would need to see is a catastrophic loss in terms of structure to really write things off. If we see, for example, here's the previous range that led to this expansion. If you're doing this, if you rip down after a major rejection, let's say you rip up, break down, and now you're like losing structure below, you're not seeing an initial bounce up here at all, yeah, then maybe things are kind of done. But just expect these to come back down to previous levels, because they have so far, which might mean just coming back down to this wick around 17. All right. Okay, new. So this is a few lines you could draw on this chart. A little bit of a channel. I don't know. Is it a channel? Kind of. These daily levels, putting in lower highs and lower lows, right? Just to point these out. Just at the highs, not the lows. So most recent low right here. Most recent high, high, low. Actually, more like high. So it is, you are seeing this downward grind. But the good thing about this is, And a lot of the times what I'll just go do, and this is under the 20 period moving average right now, so yeah, it's kind of in a semi-bearish trend. It's not perfectly consolidating either, right? It is retesting this level though, so again, previous structure, don't be surprised if you come back to it. I would definitely want to see this level right here hold. So right around 55 cents, you wouldn't want to see that that breaks. If anything, you want to see it leave sooner, right, than later. Last thing you want to see is it chilling around here. So the best case scenario for this is this breaking back above something like 65, 66 cents. You know, a more local high like this to just change what the more recent trend has been. So let me just make this chart naked again. I think that that would to me mean changing the pattern of lower highs and lower lows. All right, so do that first by retaking this high. Okay, do something like that. Put in a higher low above 67, 66, 65, right? Just this high. And then, yeah, I'd start targeting this area around 80, 85. Not bad. SNX and AVE, kind of in the same boat. A lot of things have had semi-bearish breaks, but, you know, just more of a correction than maybe people are anticipating. So some important daily levels. So this was area the price was not able to close below until recently. Now, you do have a significant structure that's down here. So however you want to draw that. The idea is that there's a lot of back and forth over here. So this should act as an area, a decent area for a pullback. I mean, if anything, this could just be having a deeper pullback, but I think SNX is, I'm just bullish on SNX. I think a lot of people were long this, expecting it to just run forever. If you look at this, just from the breakout up to this high, I mean, right now we're only at the 0.5 fib. So in a really strong breakout, right, early in the trend, you'll see that the 3A2 holds. But we're well beyond that. We've had a really long move so far. So if anything, as long as the 618 holds, which is confluent with this level back here, I'm not really worried about it. I would worry if you started falling below these lows over here. You know, at that point, it's kind of obvious, right? If you start taking out lows on the way up, then yeah, you have some trouble ahead. Sol, this is nice. Look at that. I mean, that weekly structure is just it just says progress. There's nothing, no swing point yet, no rejection. Within a range though. Last high before this high, the lows, you know, lows stay the close down here, but like I said, get an idea of where most of the activity has been stuck within. So from high to low, you could confine it even more, obviously. I mean, if we were to take, I mean, in this, you could see that the value area is probably going to be between here and here. So if we were to put like a fixed range profile on this, yeah, so value area between, I hate why is that row size changing? What happened to my colors too? One sec. There we go. Well, that's an older one because it's green. Yeah, most of the activity between 1551 and 1296. But this, this just looks bullish, right? Series of higher lows, grinding up, pressing against the highs that haven't really changed much. This looks like it wants to rip up. And it's an SNX pair. You know, anything connected to Sam. Yeah, so I think that covers it. We went over everything, right, that I said I wanted to go over. I'll look at SR and then that's it. We'll wrap it up for the stream. Kind of looks very similar to this chart, right? You know, next area of structure right down here between 0.045 and you're looking at 0.056. Next daily level back down here around 0.063. And if you're looking at, it sounds like a wife might be home actually. Coming in somewhere. Series of higher lows and higher highs. This is not I mean, as long as 0.072 holds, looks like it's just setting up before the next move up. You're above the 20 period. You have a really strong trending move up. Could be revisiting this. You know, I don't know. This might actually be setting up for its first deeper pullback back down to 6.063, but everything looks good, right? Another strong trend. But what has it done, right? Previously, it's put in a strong trend, got on to consolidate longer. You know, this is a markup, and it looks like it's beginning to consolidate. So if anything, you're going to just bet on this moving sideways. And the last thing you want is, again, what would really define this change? If you lose, I would say that this is the last significant low, and it's also back above this high. If you start falling below, you know, 0.06, and you're in trouble. But until then, like, expect it to range within there. All right, though, guys, I think that wraps it up. I think it's been a good stream. And before she comes in and interrupts us. Yeah. So if you're not trading on Phemex and you want to check it out, go to Phemex.trade. The link is below. They offer yield now, so if you want to park USDT there and gain 7 to 10%, that's fucking awesome. Like, this doesn't exist in traditional markets. So, yeah. Okay, guys. Everyone have a fantastic evening. I will talk to you soon.